Some of the interesting or kind of hot topics that I've heard come out of the Liberal government in the last few weeks is touching on capital gains tax for your personal residence. Now that's a big thing for a lot of homeowners, and if you guys don't know what that is, essentially if you own a rental property and you sell it, you currently pay 50% capital gains tax on the property. Now most people, or most Canadians, now have their nest egg or their life savings in these assets that they purchased a long time ago, and that's what they're going to retire with, or that's what they're leaving their kids. It's very difficult for an average family to be able to save $1 million in liquid assets. Now, this is essentially the only way that most families have been able to move into that middle class, is because they've been able to buy these, a home that's grown exponentially in value over the last 20 years. So what the government has proposed to do is add some sort of tax to that. I think that what they want to do is essentially to slow the market down. I think that would definitely slow the market down. A lot of people would think twice about moving because they'd have to pay tax on the gain that they have on their home. I think this is a terrible idea. I think that you tax us enough already on everything else, that your home is something sacred. I think it's a great way for Canadians to be able to get ahead, and I definitely think that this is something that shouldn't be implemented.
I think it's an interesting thing to have on the same docket as $1 billion into a rent-to-own market as well too. When you already put someone in a process that creates very little equity for them, and then once they finally achieve that ownership and is able to use that to help them support financially. I mean, a home equity line of credit and that equity takeout, that's a huge option for debt consolidation for a lot of these high interest debts. One of the first things that we saw when we got into the mortgage market was the ability to use a lower interest and use that equity to pay off some of those higher interest credit cards and lines of credits. It's a great option for those people who are stuck in that high interest debt to be able to take that away and cut that, that end goal of owning a home. Do you push people to want to purchase a home, or do you create more renters in that case if they don't have that ability to really tap into that equity?
And I think the big thing here when we're thinking about taxing the capital gains or treating it like capital gains on a principal residence is understanding first the funds that person usually would get from the sale of their house, they used to go buy the next house. So what this is actually going to do, in my opinion, is force a lot of people to decide not to upgrade. They're going to be scared to move. Like that idea of moving from Prince Edward Island now to Alberta is way scarier if you don't get to take all the money that's in your house and bring it to the next province or your next house, right? And in fact, I imagine that this is just going to allow more wealthy individuals and those with greater home equity to acquire more houses, because what I'm going to do is never sell my property. I'm going to tap into the equity, borrow against it, then go buy another one. And this really feels like a way for the rich to get richer, in my opinion, versus actually helping the average Canadian. I just envision we already have such a lack of supply that everyone's going to decide I can't afford to sell my house because I won't be able to afford to buy the next one. And so I literally think that this is a terrible idea. Although that being said, if you guys remember way back several years ago on my YouTube channel, I chatted about the moment they implemented the tracking of this, right? The moment they said that we had to report on our tax returns the sale of our principal residence, that was a forecast, in my opinion, of what their intentions were to do here. So this is one campaign promise I really believe they mean.
100%. I think there are a handful of concerning things, and one of the things I wanted to touch on, which is going to affect all the flippers out there, is they want to tax you for any property that is sold within 12 months of purchase, more than you already do for your capital gains tax. They want to stop flippers from essentially flipping properties. I don't necessarily think that's a good idea, specifically because there are a ton of dilapidated houses. There are properties out there that need to be refurbished. We have a supply issue. That supply issue is being essentially taken care of by investors who are refurbishing houses and selling them to people who need places to live or rent. But it's allowing us to be able to refurbish the houses we have. I don't necessarily think that penalizing the people who are trying to create the infrastructure in our economy is the best way to go about creating or stopping a hot market.